Hi, this is Kim Watson. Welcome to a weekly outlook on Monday, 26th of November. Okay, I wanted to keep these a little bit shorter, so I really want to keep the talk about the main theme as about some of the detail. The details are always in my morning outlooks for specific meetings, etc. So the main theme of today then are three aspects, and Draghi's already kicked the ball off for me this afternoon, so I can report accordingly to what he's been saying there. And basically, this is 2 weeks before the ECB meet and give their last view before this year, before the new year. So quite important from that perspective. Draghi has actually said that a significant monetary policy stimulus is still needed. They still need to anticipate a net asset purchase to the end. Now, I assume that's the end of 2018 rather, at least. A reform of monetary union is realistic but requires a vision. Many of financial uncertainties surrounding Brexit can be coped with. Countries with high debt should reduce it, obviously hitting at Italy there. But all in all, there's very little that's not expected there. In terms of where they're sitting, well, there is a lack of growth coming through, and that's one of the main things actually I picked up in the first place. Is Germany's growth contracted in Q3 and continued in Q4. We're seeing a bit of a slowdown through Europe overall. So this is why I've got this sort of bias, and I've been talking about this bias and net downside of the euro dollar every morning. It's because I can see what's happening here. Now this end bond buying situation by 2018 is not set in stone, and it will be interesting to see if that gets continued at the next meeting, or discussed. It will be continued at the end of the next meeting. Important thing here, the implied odds of rates increasing have dropped to, before Draghi actually leaves office next October, have dropped to less than 50%. So, or even talk about it by the sounds of it. But this is done looking at long-term interest rates, and those have been dropping, which is suggesting that it's less likelihood of the euro getting a major zip. So a big picture, I just bear that in mind. That's the big picture. We've still got the Italian debt that's still sitting there. German CPI later this week will give us an idea of the inflation in Europe, and we'll see the wider numbers come out on that as well. But the German CPI figure's pretty key there. Okay, so that was one sort of lump in there to look at. People were expecting more of a hit from Italy. I think if they stick to their guns, they probably do the best thing ever. But there you are. Anyway, now FOMC, there's the expectation that interest rates will increase come December. That is expected to go up, and that's risen using the CME tool. It was 69%, now 76%. I'm afraid you're going to have to ignore these figures this week because the COT net analysis is out. It's not out yet, maybe out tomorrow. But sentiment itself, I'm sure, may have not changed too much based on what's happening here. There is this sort of call for that interest rates are running up too high. Did some analysis on this, and quite often interest rates allowing for and looking at inflation and interest rates, and the base rate is currently sat below the interest rate, the inflation rate, beg your pardon. So the base rate at the moment is sitting there below inflation. So this is the sort of thing that would be done in the past to drive up equity markets and everything else. It's already there. It's already below it. So it's still, you can, if you understand that, it just shows there's still potential for next year. Now, there was originally 3 increases next year. That has slowed down significantly, the expectation of that, and there's only priced into the market at the moment, as I can see using the CME tool, probably 1 further increase next year, which would suggest a slowing up, and hence why people may be getting more interested in terms of the other currencies against the US dollar. But you've got to remember, quite often when the US sneezes, the rest catches a cold, and this could be one of those times. So yep, it may not be great numbers here, but for the US in some respects, but we're already seeing growth, etc., dropping. The US growth is still increasing. They're at where, okay, the numbers that can be questioned by everyone, but the numbers, they're consistent in terms of the way the numbers have been used over the years, whether they've been bodged, fiddled with, or whatever. I don't care what your views are on that, because at the end of the day, they are the numbers that are printed and people are running with. So on those numbers, employment is down there at sort of full employment, as the US would say. Yes, they're fudged by no doubt behind that, but the figures are showing full employment, so it suggests that there's a country with a decent rate of growth, still doing okay. Euro growth is slowing down. It'll be important to see how that continues and what continues there. The pound still struggles with Brexit. There's a meeting now, I believe, on week commencing around about the 10th. So just checking my diary here. Week commencing the 10th is, well, it's the 10th is 10th in 2 weeks' time. Then that will be. Week commencing the 10th is expected when the vote in Parliament would come on for that. There are some bank stress tests this week out, which may create some questions, but we know the underlying isn't too bad, and bearing in mind that all the blame and everything that goes on for Brexit. However, there's still a significant amount of the unknown. There's a lot that may be voting against Brexit, and it leaves it in a sorrowful place at the moment, and potentially with further downside. Yen, OPEC meetings may affect the yen as much as anywhere else, and I put the OPEC meetings here. Originally it was on Forex Factory is coming out this week, and it's actually the previous week. It's actually the 27th, I understand. I would check that again on a daily basis just to make sure. But that would affect, the oil price does affect the yen because it's a net importer, or it just is a complete importer, 100% importer. The Aussie and the CAD often do well from oil prices moving positively, or not so well when it goes negatively. So certainly we'll be watching those for those other pairings there. Okay, let's move that out of the way and just scroll up a little bit here. New Zealand dollar, as we look at that, there's again financial stability report out on the 27th, so key data coming out there, and any knock-on we'll see from the US data that's coming through. So plenty to give some movement this week. Maybe not so easy to be trading it because of the type of news it is, whether it's meetings, etc. It's much more difficult to trade the news unless it's after the event, if it starts sending any sort of trends there. But plenty to cause some volatility. So that's there. There are some speakers. I forget to roll this up normally. We've got FOMC speaker Clarida. Now she's he is a regular voting member, a more significant voting member. So I'll pop that in here. 1:30 on Tuesday, and then we've got the Royal Bank of New Zealand, or Reserve Bank of New Zealand even, Governor Orr speaking. He's got a press conference at 10, and then at 12 a.m. or 0 a.m. he's then speaking to Parliament. So that's what's happening this week in terms of that. Now I'm just looking here, actually I'm on a monthly chart here on the euro. I'll just come back to a weekly for a moment, just zip through some of these things. The euro, as I've put on there, still to me is in a downward trend. It sold off last week. I'd been talking about it in our trading room in the earlier part of the week. People thought I was crazy when I said, well, maybe get down to that weekly pivot at 113.55 sort of area. It sure enough went through it on Friday, okay, on a good kicker of news, but it pulled it down. It's still, to me, it looks weak. We're in it on a weekly basis. we're in a negative trend daily on, we're in a negative trend there as well. The pound, well, it's still to me weak. It's consolidated around this phase here. It did a couple of weeks ago, put the pivot swing in there, looking weak, but never really triggered it. It's just consolidating. The market's really, there's some value in the pound in some respects, but no one really wants to trade it or hold it. So there we go. Dollar yen. Still, to me, there's weakness against the US dollar, so the US dollar's pushing up here against it. It held its own in the end last week, pushed up a little bit towards the end of the week. Again, a little sort of stutter in between, caught the weekly pivots, bang on there, pulled off, but is pushing up again this morning, and the trend still runs. For me, it gives. I still believe there's further upside on that dollar yen. Aussie dollar. Not quite so easily it's easy to read in some respects. It's broken its trend here, but not really moving off particularly well on this weekly basis. Daily basis, well, it's gone into a bit of a chop zone, and that's the problem there. Still got higher lows through there, higher lows, higher highs. Hasn't broke those yet. If it starts breaking through beyond the daily 21, well, it becomes much more of a bearish sort of sign that we could just say this may just be a blip up on a downward direction there. Canadian dollar 2 is still soft against the US overall on the weekly basis. It still hasn't pushed back towards those absolute highs there. Tried it last week a little bit there. Had a good old day up there on the 20th, but diving and chopping around here, it's still got the potential to push upwards. It's got high lows, high highs. To me, it still remains bullish. Intraday, I tend to steer clear of the Canadian dollar, but as I say, there's opportunities for that to shift up. Okay, I'm going to get onto the S&Ps, look at the cash market here, only because I've been drawing on it, and I wanted to look at a monthly picture. Actually, I didn't want to look, I wanted to look at a quarterly picture, just because I need a whole picture in, really. It makes it a bit clearer if I put the quarterly picture in there. And there's a lot of discussion about whether this is a bear market or what type of market we're sitting in. Technically, I've just put a 10% signal there on the red line, which is a technical correction, is classed as a 10% correction. Oh, hang on, technical correction of about 10%. It doesn't actually get into any sort of recessionary move until it gets towards the 20%, and it's a bit off that. And I'm just looking at the moment. Well, I still believe there's downside risk in this. In fact, I'm going to come to the S&Ps now. The E-minis. It's just I want to go into the futures market here. Still think there's downside risk on this market still when you're looking at this, but a bit of a bounce at the moment, but it might be just sort of kicking into these prior body sort of lows here. It held up a bit there last week. Maybe it's there's with the chatter about less interest rate increases, it may be seen as being a bit more solid, but realistically I think this is still in a bit of a technical correction which hasn't completely finished, but we'll see. Okay, that's it for me. I've managed to do it in 13 minutes roughly, so I hope you have a great week. I will update you on other factors on the daily outlooks or morning outlooks. Bye for now.